So thank you for joining our second session in the series on how to get better financial control of your business. A recording of our first session on setting up for success can be found on our website, just in case you missed it. Now, just very quickly, the three takeaways from that first session included, number one, making sure that you take control of your finances. Don't rely on your accountant to do this. Number two, make sure that you consider what you want out of your accounting system before you start, as this will act as a guide when setting it up. And then number three, it was make sure that you set up your account coding and structures to allow you to extract the right level of detail to manage your business. We do note that most of you will already have set up your accounting systems, but Sustainable Scale Up Cluster can provide you with the help and advice on how and when to change your setup as needed. So any reflections that you've had after the first session, we can talk to you about, but more on that later. So now, looking forward to today, session 2, we're looking at common problems and in the use of your accounting systems. We will be focusing on problems with entering information into your accounting systems, and we'll be looking more at the outputs like reports and dashboards that you use for decision making in session 3 next time. So we've gathered a slightly different panel of people together to discuss the topic common problems this week. So I'll let them introduce themselves in a moment. Firstly, if you could just make sure that you're on mute for the duration of the guided questions, which we'll be limiting to, it should be around 40 minutes. So I'll be asking questions of the 3 people on our panel, and there'll be a chance for you to ask questions at the end, and there should be some time for that. But also, if you'd like to capture questions as we go, please do use the chat function to ask questions as we go through the guided discussion. And we'll either pick them up as we go or we'll pick them up at the end. So the panel, if I could just ask you to introduce yourselves. So Joan first.
Well, hello everyone, Joan Edwards. I'm an accountant for my sins who've been with BIC for about 4 years. I run the Investor Ready programme, and I'm also a Sustainable Scale Up Cluster Manager for mainly the North West Wales region. Great,
thank you. And Wayne?
Hi everyone, so I'm Wayne. I'm an accountant for Oldham Mill. I've been chartered for about 10 years now. I've worked with some bigger businesses in audit side of things, and I've also worked with some smaller businesses as well. And then on top of that, I even took on the extra challenge of starting my own business. So I know where you guys are and what sort of challenges you're going through.
Thank you. And Wyn?
Yeah, hello everybody. I'm not an accountant. Just get that across very early, because I'm not by no means an absolute expert in this stuff. I worked 37 years in banking, and then I worked for 5 years scaling up a business. So I've got the scars and the t-shirt from that. Plus I had all the fun and its job satisfaction. I've never actually ran an accounts package myself, but I have had experience of seeing and interrogating thousands of sets of accounts from numerous businesses I've seen. So I know what a well-presented set looks like. And I also know the kind of questions that people are likely to ask the business owner or manager. So it's really important. I know the important things that you need to understand from your accounts.
Great, thanks all for that. So I'll just get quickly onto the first question that we're going to pose to the panel. And it focuses on that sort of the whole topic of reconciliation, bit of an accounting term, but often we'll find that in accounting systems, there's a challenge to get things reconciled and it all goes green instead of red, which is great. But how do you know that what you've done is right? How do you know that what your accounts are going to tell you is the right thing? So I wondered if the panel could just sort of address those kind of concerns around how do we know that we've got it all right? So if I go to Wayne first.
Yeah, sure. I think this is a good one because we quite often get accounts come in at Old Mill and everyone thinks it's great, they're all reconciled. But actually, when you look at them, it's a bit of a mess and things all over the place. So how do you guys make sure that you're on top of it as you go? I think one of the things is if you're not, you're going to get chased by creditors. So people are going to be asking for money because if you don't think you owe it, you're not paying it. Same with HMRC as well. You know, they're going to be chasing if you've not paid the liabilities. One of the things I would say on that is creditors quite often send supplier statements through. So if you get one of those through, just check it against your account system to make sure that what they think you owe is the same as what you actually owe. and that will keep things consistent. And that's a good time then to pull out any anomalies as well. The next thing I'd say is, we'll get onto this in the next session, but if you can find the balance sheet and profit and loss account, they're good ones to run. So the balance sheet shows you your assets and liabilities at any given point in time. So if I was to run it today, it would show me what I owe as of today. And have a look on there at all the liabilities that you owe, and then check it against external documents. So this is what we do for a year-end accounts process. You know, we'll go through that balance sheet. We'll compare it to the, say, P32, the last VAT return that was submitted, you know, all that sort of stuff, bank statements, also loan statements, that type of thing. And then the final thing I would say is on the profit and loss account, which is your income less all of your costs, you can actually run a report which shows you that for not only this month, but it also shows you maybe the previous 11 months. So you can start to see a trend in your data. And if that trend's going up and down and things all over the place, then there's probably going to be errors which you need to go back and have a look at. Really you want it to be quite consistent. And if it's not, go and have a look at the areas where they're not consistent, because that's probably where the errors are.
Okay, thanks, Wayne. Joan, have you got any sort of points or thoughts to add around this whole how do you know that you've got it right?
I think it's a case of sense checking your numbers. So as Wayne said, you look at your profit and loss account. If your normal turnover in a year is 100,000 and your profit and loss is showing 1 million, then something's got a decimal point in the wrong place. Or, you know, your normal salaries bill is £15,000 a month and you look at it in June and it's 75,000. Something's quite obviously gone wrong. So it's sense checking your numbers and looking for the ones that stick out. And also all of the accounting systems have got a dashboard. I was at a client's the other day. You looked on her dashboard. It said that she owed her creditors 47,000. And she said, I don't owe anybody anything. I've paid all my bills. So something has gone completely wrong, despite the fact the bank is all reconciled and everything. Something has gone wrong somewhere in her system. It turned out she had about 200 duplicate entries. So, you know, that's the sort of thing. And it's sitting there on your accounting system saying, here I am, there's £47,000 there. Look at me, because, you know, you either owe 47,000 or it's wrong. And that's knowing your numbers, really.
The important thing to add to that, Jude, as well, Jonas, is that the bank balance in something like Xero, maybe QuickBooks, will be an accumulation of all the transactions you put in there. It's not necessarily a bank balance. Yeah. So that's why I say check it to the statement, because although it might look right in there, you need to actually make sure that is your bank balance.
Yeah.
Great. Wyn, what have you got to add to this?
Not a lot, really. I would duplicate what's been said already, and looking at your reports, if you can access them, and just do they pass the make sense test, really. If there's something unrealistic or either extremely positive or extremely negative, you need to highlight that. Don't just accept it as a given. You've got to look into it. Something's been misposted or put in the wrong place or duplicated even, which is a common thing. Don't forget, these reports are there to help you to make decisions about your business. And if you're making decisions based on incorrect information, that's a very dangerous place to be. So if something doesn't look right, please check it out.
Yeah, great. Thanks, Wyn. And I'll just stick with you, Wyn, for the next question, which is we're talking about the issues that we have with the system and the things that need correcting. And obviously journals are often part of that. You hear this word journals, and what on earth does it mean? I'm a business owner. I don't know anything about journals. I don't care. What are they, and why and when do we need them? But what's your understanding of that, Wyn?
I think it probably goes back to Dickensian times when you used to see clerks sat at high desks actually entering numbers into journals, which were big books, and they'd put different things in different journals. It hasn't changed a lot, really. That's what accounting is. And then fortunately now we have software which will bring all that data together and generate some sort of sensible reports. So the journals are where your first place you put your entries. There'll be an entry for sales, there'll be a journal for sales, there'll be a journal for purchases, there'll be a journal for cash entries, and so on and so forth. Unfortunately, I'm old enough to probably remember when journals were still being completed before software was available, and double entry bookkeeping was the name of the game. And that's where it's come from. So it continued the phrase journals into the computer age, and that's what they do. It's the first place you enter if you've received an invoice or if you've made a sale or something, the first place you enter it is in the appropriate journal.
Yeah. So in most cases, your accounting system will automatically do that when you load an invoice, when you process things. But we also need to make manual journals at times. And Wayne, could you just explain a bit more about why that's the case and what kind of things that we might have to journal?
Yeah, okay. What I would say about journals is that the whole purpose of them is these extra journals, not the ones that Wynne was talking about, is to match your income against the costs within that period. So you want, for your income, you only want those costs to be in there. If you've got other costs in there which relate to other periods, we want to take those out, because otherwise your profit is going to be skewed. And the best way I can describe it is for an example. So if you buy in a whole load of ingredients, or you buy in packaging, say you bought in packaging, it was £5 for the month, you're probably going to post that against your packaging cost, but actually it's going to be spread throughout the next 12 months, so you're not going to use all that packaging in month 1, you're going to use it in month 2, 3, 4, 5, and 6. So the point of the journal is to pull out a lot of those costs and just leave in the bit that relates to the income. So really, you only want the packaging costs relating to that income that you made in that month. So that's why for a stock journal, we would pull out all the other costs and we just put it as an asset. And then that way, when you look at your profit and loss account, you can see exactly what profit you've made, and it's not skewed by all these other costs.
Okay. And Joan, have you got anything else to add about sort of journals? Because it's an area that people don't want to have to think about, but I guess there is an accounting need to give the insight that people are looking for. So what's your sort of take on all of this?
Well, there's 2 reasons for doing journal, as Wayne said, to adjust your accounts for things that are in the wrong period. But the other thing is to adjust your accounts for things which are not in your account. So, for example, your payroll is not linked. So if you've got Xero and you're not running Xero Payroll or Sage, and you run, say, for example, your accountant or an external body is running your payroll, you'll see the payments going through your bank account to your individual members of staff, but you won't have the entries in your system for the national insurance, the tax that you've got to pay over, and that won't put that the charges into the P&L account either. So you'd have to do a journal to bring external things like that into your system. And you've got things like depreciation as well. You probably haven't got a fixed assets module. If you're depreciating your assets, then you will need to put those journals in on a monthly basis.
Okay.
I was going to say the point of depreciation. I don't know if many of you, this just sounds like an accounting term, but I suppose if you have a fixed asset and it's supposed to last you for 5 years, you'll be generating revenues with that fixed asset. So what you want to do is apply 1/5 of the cost of the asset as a cost in the P&L. So again, what we talked about in terms of the revenue that we've created and the cost associated with it, if your asset only lasts 5 years, then you need to apply 1 of those years in year 1. And that's what we call depreciation.
Yeah, thanks, Wayne. So just sort of moving on to another sort of issue that people might find that they have, if they end up knowing that they put something into the system incorrectly. So for example, they put a wrong code on an invoice and you know that it's being processed in the wrong bit of the P&L or whatever it might be. What's the impact of that? What happens, and what should they do about it, Joan?
Well, most systems will allow you to go back into the invoice and edit and put it onto the right code, unless you've actually closed down a period. For example, your accountants may have closed down your system for last year. If you found an invoice that was wrong last year, you can't do anything about it. However, unless you're closing your periods off, which you may do, for example, say you're in June, your financial year is January to December. At the end of March, you've done your VAT return. You may have sent management accounts off to your bank for your bank covenants. You might want to close off March to make sure nothing can be changed. So if you do that and you then find an error on one of your March invoices, you can't change it, and then you have to do a journal to put it onto the right place. But normally, most systems will allow you, if you've not closed off, to go back into the system and actually just change it and put it in the right place.
Wynne, have you got any other thoughts on
not really on how to sort them out, but it's a sort of flippant comment really, or smart ass comment, is get it right first time. Now, what I mean by that is your accounts are a really, really important part of your business. So if you're unsure about where something goes, don't just stick it anywhere. check it out. Either go onto the help desk for the system or look on YouTube or even phone your accountant. It's better to get it right first time than have all the hassle of trying to put it right again at a later stage.
Yeah. And Wayne, you probably get called on this regularly.
I have to do it a lot as well.
Yeah.
So speaking about Xero in particular, when you've posted something and you want to change it and you go to edit, if there's a payment attached to that invoice, it's going to really restrict on what you can do. So what you've got to do is go in, unreconcile the payment, and that's not going to delete the payment. It's just going to put it back into the bank reconciliation. You then make the changes to the invoice that you want to change. That might be changing the code, or it might be changing the date. And one of the things I'd say about the date is make sure you put the invoice date, because from a VAT point of view, it has to be the invoice date. And it also might mean that you get input VAT a bit quicker as well. So yeah, make your changes and then re-reconcile the payment, and then you're good to go. If you see something, you're like, there's loads of these, it's going to take me ages to go and unreconcile these and then reconcile them again. Have a look at your permissions, because there's something called find and recode, which you'll find in the advanced section of Xero. You'll either have access to it or you won't. So if your accountant has the ownership of the software, they'll probably have access and not give it to you. At which point, go to your accountant, just ask them and say, look, I've got all these issues. Can you correct this posting for me? Like I said, if you own the license, you should be able to do it yourself. It's called find and recode. Just be careful with it, because that's why it's restricted. You know, you have to make sure you get it right.
Yeah, thanks, Wayne. Good tips. So let's move on to VAT. Do you worry about VAT? Does it keep you awake at night? What advice can our panel give for you to stay on top of your VAT? Win.
Again, I'm not going to give accountancy advice. I can give general business advice about VAT. Is that when you've sold something and charged VAT on it, that VAT is not your money. It belongs to HMRC, and it can be quite fussy and awkward if you try to keep their money from them. So what I would say is try to get the best understanding you can possibly of this before you start making entries. Speak to your accountant before you start going. If you're already up and running with the business, then that's fine. You'll have some basic understanding, but you'll occasionally get odd elements of VAT, because different rates of VAT are chargeable on different things. So make sure you understand that and apply the right rates and so on. If in doubt with VAT, always talk to your accountant, because you can get yourself in some very deep bother with HMRC. They're not very nice and friendly sometimes. So be very, very careful with anything VAT related. Make sure you get it right first time. Speak to your accountant for advice if needed.
Great. Yeah. Wayne, have you got any other thoughts on VAT?
Yeah, I would definitely emphasize Wynn's point there. I've got a really good example actually of how complex VAT is. So imagine, so there was a case between HMRC and McVitie's, the Jaffa cake, and the definition between a biscuit and a cake is 0 rated even if it's covered in chocolate, whereas a biscuit is standard rated if wholly or partly covered in chocolate. So HMRC come after McVitie's in 1991 and said, right, you have biscuits which are covered in chocolate, you have 20% VAT on all of your sales. They were like, hang on, these are cakes. So they had a cake which is covered in chocolate, which is 0%. So the liability between those two is actually massive, even though it's such a small little variation. They actually ended up creating I think it was like a 12-inch Jaffa cake, just to prove that it was actually a cake, and they won the case in the end. But it goes to show how complex the VAT system is. On that, I would say, once you've got the rates from your accountant, make sure you apply them consistently. And one of the ways to check that is to run a report. So you can run a report of all of your nominals, which is all the categories you've posted to, and then you can show what your VAT rate is on them. So if you know that you're posting very similar expenses, but you've got different VAT rates, there's probably something that's gone wrong there. So I'd run that report probably every month, just check the rates, make sure they're consistent, and they're also consistent with what your accountant's told you.
Great, thanks, Wayne. Joan, have you got any other tips?
No, it's as Wayne said, it's sense checking it. Once you've run your VAT return, you can actually then drill down on all the different categories, and you look through and you can see, for example, if all of your sales are 0 rated and there's one in there that's 20%, then there's something you might want to check that one, or the other way around, you've got a whole load of 20% and a whole load of zeros. You might want to check whether it's gone right or wrong something there. And again, on the expenditure side, just look through it. If you look at a code, you see it's all 20% and there's one there that's 5%. you need to go and have a look at that. So it's just sense checking the information that you get from your system.
Thanks, Jane. So just moving on now to payroll, another sort of the key areas that is potentially done in your account system or using a third party system. What are the key things to remember? Wayne, could you share some thoughts?
Yeah, sure. I'll share a couple of errors we see as well sometimes. So on the payroll, when you make a payroll posting, which we talked about earlier, which is probably a journal, but if you've got something like Xero, it'll do it for you. Just be careful that where you post the wages to, because you'll have some direct wages and you'll have some indirect wages. And what I mean by that is that the direct wages are people that make the product and they belong above the gross profit line. And then you'll have people that are overhead, so like marketing. If you've got in-house finance team, those type of people will go below the line. So you've got a distinction there, and you've also got a distinction between the different categories. If you've got different types of product and you've got different people working on maybe wholesale against retail, then when you make the posting for wages, you need to separate them, because otherwise when you run the profit and loss account for one of the departments, it might have both sets of wages in there and it's not showing a true profit figure. So there's a couple of things to look out for. Another thing I've seen which go wrong is some people put expenses through payroll. I mean, you can do it, but it just makes things a little bit pushed together. I'll just keep expenses separate, then you can go through the proper approval process and you can pay it separately as if they were a supplier. And then the other thing I'd say on wages is that when you make a posting, so you'll pay your wages, you'll pay your PAYE, your pension and your NIC, and it's very tempting just to see that come into the bank and then post it to where it needs to go. But if you do that at any given point in time, if you run the balance sheet, which we talked about earlier, you can't actually see how much you owe HMRC. So at the month end, what you want to do is make a posting where you put the expense in the profit and loss account to the places that we just talked about. And then you'll also have liabilities, and you'll have a liability that you owe your staff, which are going to be salaries. You'll have a PAYE NIC liability, and that's always paid on the 22nd of the following month. And you also have a pension liability. So if you post it like that, instead of doing a cash coding, you can then see how much you owe HMRC at any given time. And it's just going to help you with your cash flow management.
Yeah, thanks, Wayne. Joan, any other thoughts on payroll?
I was thinking of errors I've seen. Like, as Wayne said, when you make the payment to HMRC, it goes on the balance sheet to clear the liability, not onto the P&L account. And I've had a couple of clients who've, smaller companies gladly, deducted NIC from people and not realised they actually have to pay it over until HMRC contacted them several months later and said, are you actually going to pay us this money or not? So yes, when you're deducting money, you do actually have to, as Wayne said, it is actually HMRC's money and you do have to pay it over.
Wayne, well, you got any thoughts on payroll?
Yeah, very similar to VAT, really. I'm just stating the bleeding obvious, but almost being a policeman, really, saying a lot of this money, your national insurance and PAYE is owed to the HMRC, but of course the pension contributions, which everybody has to pay these days, are the property of your employees. So take great care with it, because I know the law can come down very heavily if anybody's misused that money. Not that Robert Maxwell minded, but it is frowned upon. And make sure from the date it's declared, you're not using it and mixing it up in your general cash flow. It must be paid to where it needs to go as soon as possible.
Yeah, thanks.
Can I just add one point which I should have mentioned, is the reason that it's very important to code your payments to HMRC correctly, because if you're going to a bank or a finance house to borrow money, one of the questions asked is, when they look at your balance sheet, do you owe HMRC money? Because they want to know that. They want to know if HMRC are hovering in the background waiting to swoop. And if you might have paid HMRC, but if your balance sheet shows that you owe them 20,000, your bank's not going to give you any money.
It's worth checking against your HMRC portal in that case, isn't it, Jane? Because you can obviously log in and see how much you do owe them, and what does your balance sheet show. Obviously they should be the same. If they're not, then what's happened? Yeah.
Okay, thanks, guys. Now, accruals and prepayments is a topic that, again, it's in the category of month-end stuff that my accountant might do. we've talked about journals and the idea of needing them on a monthly basis to make your accounts mean something to you on a monthly basis, i.e. to get a profitability understanding. Just sort of open to the panel, are there any sort of comments that you want to make, any of you, about accruals and prepayments, and how business owners should treat them, or do they need to think about it?
If I can, I'll just elaborate on my previous point. I suppose that we're trying to match off revenue against costs. So if you know, another good example might be you've incurred a cost, but the invoice just hasn't arrived yet. So you haven't put it on your system. And if you was to run that profit and loss account, the cost isn't in there. And that's what we call an accrual. So what you'll do is you'll make an adjustment to bring that cost in because you know you haven't received the invoice yet. So at that point, you've got all of your income and you've got all of your costs related to that period. On the other side, say you've just paid a membership which lasts 12 months, we would see that as a prepayment, because again, you don't want to recognize the whole of those 12 months in that 1 month. You want to spread it out. So what we'd do is take some of that cost out and then we'll put it into future months. So an accrual was to bring costs in and prepayment is to take costs out. Yep. If any of the participants have questions on this, let us know, because it's not a straightforward thing.
And is this something that, I maybe to Joan, is this something that people should try and get their heads around, or ask their accountant about, or how would you sort of approach?
I think you should, if you're trying to get a good view of how exactly your business is doing, you want to know what expenses you have incurred, not necessarily what you've paid, because that gives you a better idea of your profit. What I would say is I have seen people who the accountant has been doing accruals and prepayments for, you know, months and months and months, and then they've taken their accounts back from the accountant to do it themselves. Then they stop doing the accruals and prepayments, and that makes your accounts look a bit odd, because all of a sudden you start getting what looks like 3 invoices in 1 month when it was spread nicely across the year. So if it's one of those things, if you start doing it, you need to keep doing it.
Yeah. I also think take a view on it. So I mean, if you know, first of all, just know it's a concept which you guys have to adjust for, because so then you make your P&L correct. But if you're finding that the adjustments are £100 or £200 and it's not really affecting the profit figure, you might decide not to do it. But at least as a business owner, you know that they're required, and actually you've taken that decision not to make those adjustments.
Yeah. So you're talking about being aware of the principles and the concepts. You don't necessarily know how to post a journal, you don't necessarily know what to do with that, but in terms of awareness, that's quite important. Wayne, have you got any other sort of thoughts on?
Yeah, it's just about thinking really why it's done and the benefits of it. It's about assessing the performance of your business over a set period. In normal cases, that's usually a month. So if you're looking at the management accounts for your business for 1 month, you want to be looking how you're trying to find out how profitable they are, etc. You want the costs and the revenues that directly relate to that period. You don't want something, for example, I think Wayne said earlier about buying a whole load of cardboard packaging or something, which is going to last you 6 or 9 months. You don't want all the cost of that applied to month 1, or it's probably going to put you into a loss situation straight away. Just take a portion of it. And same with insurance premiums. If you pay them annually, spread it out over 12 months. Or if you're in food manufacturers, most people are, maybe you've bought a bulk load of sugar, which might even last you 12 months. But you don't want to put all the cost of that in 1 month. You want to spread it over the 12 months. It's the principle of understanding or being able to assess how profitable I was in that particular period.
Yeah. So if we just think about, most of our beneficiaries will have loan repayments that they make regularly, or hire purchase repayments. Is there anything in particular that people should think about with regard to those? Wayne, if you could maybe carry on.
In answer to your question, yes, there is. It's very important to separate the different aspects of a loan, which is the capital amount, the actual amount you borrow, from the interest or fees charged upon it. The interest and fees would need to be applied to your profit and loss account, whereas the capital element is all about the balance sheet. So the initial capital sum would go in the balance sheet when you borrow it as a liability, and then over a period of time, as you pay it off, the liability reduce month on month or year on year. So it's very important to separate them out. If you don't quite know how to do that, every loan or HP agreement you ever get will always have a loan agreement form or a documentation specifying exactly how much interest would be payable. So that's the time you need to do something with it. And if you're unsure, it's really important you speak to your accountant or somebody early on to know how to deal with it and how to treat the interest and the capital separately. Because it's quite complex to unravel it all at a later date, if you get in the wrong place.
Yeah. So Wayne, what's your experience of helping people get this right?
It's a question we get all the time. You know, how do I post them? And I think the easiest way to do it is to post against, say you bought an asset, that goes against the asset in full, create an invoice for that. There'll be a VAT element on that as well, which you can reclaim. And then you mark it off as paid against a liability account. So you create a new liability account, which will be HP specific to that agreement. And then what that does is it creates a liability in your balance sheet. The invoice is marked as paid. And then every time you make that payment from the bank, you assign it to that liability account. So then the liability account comes down over time. And then the way of posting the interest that Wyn was talking about would be to have a look at the loan statement, have a look at the balance in zero, and then the difference, as long as you post everything correctly, is the interest. So you can then make the adjustment for the interest. It's something accountants will do at the year end anyway, we'll adjust for the interest, but as you go, if it's significant, you'll probably want to make those adjustments. The good news is that you do get a tax reduction for interest, so it's going to reduce the tax bill slightly.
Mm-hmm. So it's worth investing to actually separate that out and identify it in the P&L, isn't it?
Yeah, I think we're going to do it anyway as an accountant, and your accountant should do that. But if you want to assess the profitability month on month, and the interest is a big element of that, then separate it. If it's not a big element, you might want to wait to the year end.
Joan, any other thoughts on loans, hire purchase, repayments? I know that you've sorted out a number of our beneficiaries' situation where it's not being processed correctly.
Some of them where they're making the same payment every month. It's £50 is the capital and £12 is the interest, and that is the same payment every month. So when things like, well, most of the accounting systems, you can set up a rule as that payment goes out of your bank, it automatically puts the capital on the balance sheet and puts the interest into the P&L account. So that makes life that bit easier if you can set it up to start with. Obviously, if you're making a different payment or the split is different every month, then you need to do it manually.
Yeah.
Can I just add one further thing, Andrew? Being
Yeah.
an ex-banker, I couldn't resist. If you're trying to assess whether you can afford the repayments on a loan, and of course only the interest is being applied to your profit and loss account, don't just look at profitability, you've got to look at your cash flow. Because whilst only the interest is being charged to your profit and loss, you have to find the cash from somewhere to make the rest of the repayment. Yeah. So banks will always banks, as you probably already know, always ask for a cash flow forecast and a profit and loss forecast, both separate concepts, but both very important.
We had this recently with one of our clients who set a budget for the year, and they set the budget 12 months in advance to be break even, slightly ahead because of some of the things they were doing. Their cash was a little bit tight and hadn't taken into account the fact that they need to make these repayments for the loans that they had. So absolutely, they were in a problem of cash flow, which was going to be negative, and they didn't even realize. So when you're doing your budget going forward, take that into account. You need to make enough profit to cover the other costs that you're paying out.
Okay, so let's just move on then to sort of changes that need to be made to your accounting system. So that could be to do with if you've made a mispost, or if you've agreed to give somebody a refund. And could you just talk about some of the entries that need to be posted around that kind of thing, and any thoughts and tips? So maybe Wayne, if you could.
Yeah, sure. I think in terms of changing a posting, we covered that earlier. Take the reconciliation off in terms of the payment, make the adjustment, and then re-reconcile again. In terms of a refund, you can raise a refund on most systems. So whether that's against a supplier or a customer, and then it's best to go into that refund. And if it's a cash, so you've got cash in or you've paid cash out, you need to mark it on the credit note, because when you come to reconcile that transaction, it will then appear. If you've just got a credit note and you haven't marked it as cash paid, when you go into the reconciliation, it won't let you pick it. So you can't pick this invoice less this credit note, because obviously you just paid the net. Or if that money's come in, you've got nothing to match it against. If that money's gone out, you've got nothing to match it against. So that's all I would add really, is just to make sure you mark it off as paid. If not, if you're not going to pay and it is going to be netting off against an invoice, then go into that credit note and actually make that netting off. Because as I say again, you can't select that credit note and zero on the bank rec. So you need to reduce the original invoice and then you can match the payment against it.
Yeah. Joan, have you got any other sort of thoughts, particularly on sort of refunds?
Yeah, I mean, QuickBooks is similar in terms of when you put a credit note on a supplier's account. If you're not actually going to get the cash back, if you're going to just reduce a future invoice, then you need to go into the supplier's account and say, right, that credit note will be used against this invoice. So you pay a lesser amount for your next invoice, and when that comes into the bank, you can match it off. It depends what systems you've got. QuickBooks, when you're getting money back from a supplier, it's got a rather complicated way of dealing with it. So if you are using QuickBooks and you have raised a credit note and your supplier is actually going to pay you the money back because for whatever reason, I would suggest you talk to your accountant to make sure you get it right, because it's not intuitive in QuickBooks. It is in Sage and Xero, but not in QuickBooks.
This is where customer statements and supplier statements come in again, because credit notes are quite often missed by suppliers, and then they'll say you owe this much, and then you go back to them and say, actually, I've got this credit note. So that's why it's important to reconcile the statement against the accounts.
Yeah. So we've covered quite a lot of detail on sort of inputs that people are making into their accounting systems. I think we've sort of probably covered it a lot of ground. Hopefully, elements of that have triggered thoughts for different people listening. But from the panel's point of view, could you just clarify sort of how you might sort of summarize some of the key areas of focus and in terms of how we should be getting our accounting system right? If we just start with Wyn for that.
Yeah, sure. For me, your financial accounts and reports are probably the most important source of information about your business for yourself to manage your own business, but also for third parties, banks, credit agencies, suppliers, whoever it might be. So it's important you get them right. You're going to be making some important decisions about your business based on your financial accounts and your management accounts. So I go back to what I said earlier, get it right first time. It's no point trying to wing it and thinking it'll be all right, I'll sort it out another day. Sorting things out later cost a lot of time and effort, which most small business owners haven't got much of time, as it's a very valuable resource. So much better to get it right, spend a bit of time researching first, talk to your accountant, look at YouTube, look at the help functions on the systems, and get it right first time. And it sounds flippant, but it's so important. I can't stress it enough, really.
Yeah. Wayne, what's your
The takeaway? Yeah, I'd say just being aware of these concepts. You don't necessarily have to do it all. You might hire a bookkeeper or someone else to do it, but you just want to be checking that they are actually doing the adjustments that you know need to be made. So, I mean, if we talked about today, for example, looking at the balance sheet, which was covering the next section, and just comparing everything to external documentation just to make sure they're correct. That's one thing people should be doing. Another one is making adjustments on accruals and prepayments if they're big enough, and then stock as well, because stock will throw that profit figure miles out. But as a business owner, if you just understand that's what needs to be done, and then you can get someone else to do it, you don't necessarily have to know the detail of how to do it.
Yeah. Joan, what's your sort of overview, takeaway, thought?
Get to know your numbers. If you know your numbers, if you're comfortable, you regularly looking at your profit and loss account and your balance sheet, when something goes wrong, it will stare out at you. You know, a number suddenly disappears or is 10 times bigger than you thought it should be, then that should set the alarm bells off. And if you know your numbers, that will be easier to see.
Great, thanks, Joan. Okay, so thank you to the panel. That's the end of the sort of the questions that we wanted to cover. Hopefully that's raised some things to think about for you. Are there any questions that people have now that they'd like to raise with anyone in the panel?
I'd like to ask something, if I may.
Yeah.
We have a very seasonal business. So in the example that you gave about spreading costs of, say, packaging over the year, would would you generally spread it regularly over, or can you say we're going to use most of that packaging in December, for instance?
Do you want me to cover this one?
Yep.
Yeah, I think exactly that. You know, if you've made the income in December and you've used a lot of that packaging to make that income, then that's how much you recognize. Don't do it. I wouldn't do it consistently over the year. I mean, the way we actually do it is you do a stock take every month, if you can do that, and then you know exactly how much you've got left in stock. And then you take the cost of that stock and then you pull that out of the profit and loss account.
Okay.
Yeah. So as that changes every month, you will work out, okay, I've used this much stock. This is what I've got left. This is what I'll pull out. And then that should leave you with the correct cost.
Okay, perfect. Yeah. Lovely. Thank you.
Okay, any other questions? There is an awful lot to sort of like think about. I know one of the challenges that you guys have as business owners is sort of that you don't want to be accountants, and yet there is this sort of like responsibility for you to understand your accounts, and what we're here for is as a sort of a cluster group is to help you sort of reflect. So as hopefully as we've raised things for you to think about, you may have some new worry beads now that we've created for you. What we want to do is to be able to support you going forward with this. And we do have, either through the Investor Ready program that Joan heads up, or with specific help that we can arrange in the short term from Old Mill and the company that Wayne works with, we can get people to come and help and look at what's going on in your accounting system to try and sort out any issues that you're aware of, any areas that you perceive may not be quite right. So don't feel that this is just highlighting a lot of issues that we're not going to help you to sort of try and address. Just wanted to sort of put that out there. And one of the other things that we thought about going forward would be potentially getting user groups together for different accounting systems. I know most people use Xero from our experience with our beneficiaries, but there's also QuickBooks and Sage, a very common free agent as well. But it'd be good to just understand if there is an appetite for a small user group to be pulled together, where not a frequent thing, but periodically there'd be an opportunity to get together to sort of ask questions and hopefully get some answers around how you're using your accounting system. So that's something maybe just to, if anyone wants to feed back now, that'd be great. But otherwise, just something for you to reflect on, and I'll drop a note around to sort of give that opportunity for us to create something there. But any other thoughts on anything I've just said there?
I'd just like to say I think that's a really good idea. I'm, for the last year I've been a bit preoccupied with other matters, and so I'm spending a lot more time doing my accounts, and it's beginning to start to show in the business, which is what I need to do to move forward. I'm trying to look at my accounts every day rather than well, not so regular, shall we say. I'm still struggling a bit with Xero in places, and I used to be a senior accounts person, so it's not as if I'm not familiar with accounts, or I used to work for a firm of accountants, so I can understand it. I'm just not that familiar with the software itself. So I think a user group would, in fact, that was the one thing I was going to ask, what actual support can I have? Because also I noticed when I start looking at a search for hints and tips, just wading through all this, text on Xero, for example, and sometimes you just want a quick answer on something and a little bit of extra help. For me now, that's exactly where I'm at. So I'm working much closer with my new bookkeeper. We have got some anomalies that we do need to address because we're at our year end, and there are some things that we're both aware of. But these need to be picked up earlier, and so that they don't build up to the year end issues. So my team are far more involved as well than they used to be. So I've got a good assistant manager who does a lot of my invoice work for me. Don't think we do as many stock takes as we should be, and I think we need to be doing that on a regular basis. And I'm just a bit worried about where my stock shows in the assets, because if it's not sold, it's presumably an asset. and I'm not sure where that's showing currently. So I think that's something I need to be looking at, but definitely a user group, specifically around Xero for me, would be really helpful. And I'm actually quite hungry for something now, because I've sort of got more questions than answers at the moment. But you know, you can't leave it for any length of time, otherwise you lose control of your business, and I just don't want to be in that situation. So yeah, I very much welcome that. Thank you.
No, that's great. I think I know that it would be a place for the shared issues to be worked through,
Yeah.
a group like that. So I think we will look to try and create something around that. The additional support that is maybe more of a short-term thing is this, to deal with specific issues or areas that you become aware of that you are not confident about, and it's
Okay.
and that might be that you're not confident in how interfaces are coming in, and very frequently we find that there are duplicate entries in people's accounts where you've got different systems interacting with Xero or whatever your account system is.
Yeah.
And sometimes that needs working through and then sorting out as a one-off exercise. Now that's something that we could potentially provide one-off help to look at and to help sort. And that's something that Wayne would be aware of, and sort of from an Old Mill perspective, as I say, or Joan from an Investor Ready perspective. And we can, in discussion, we can work out the best way to sort of tackle that going forward. So I think hopefully these sessions are about creating that awareness, that there is a need, and then it's for you guys to articulate the need back for us. And we'll see what we can do on the specifics, but we will set up that special interest group.
Can I just answer Julie's question? Yeah. Hope you will, Julie. So the stock should just be another line on your balance sheet. It should say, you know, an asset, and it should just say stock. And it comes from a journal. So if you go into manual journals, you'll credit the stock, and you'll debit credit the stock in the P&L, so that the cost that it relates to, and then the debit will be stock in the balance sheet.
Okay.
You're reducing the costs. So let's say that's packaging we talked about earlier. You're reducing the cost of that packaging, and then the other side just goes into the balance sheet under a code which should just be called stock.
Okay.
Sometimes referred to as finished goods, so I don't know which one it will be for yours.
Okay.
But again, as you look at that and find that, hang on a minute, I'm not sure that's what's happening, then you reach out, and we can hopefully help. This is the advantage of the cloud-based systems as well, that potentially we can do that relatively easily with a remote sort of view of what's going on. So yeah, do reach out if you'd like to. And any other questions from anybody? Okay, well, thank you for joining us. I hope that was useful sort of use of your time, and we'll be doing the third and final session in this series, which is focused more around the reporting and the outputs and the insights that you're getting from your accounting system, so that the dashboards and the reports, and how you're using those, or how you could use them. So I look forward to that in 2 weeks' time.